And so the point I wanted to make, people, is that we have been in a market where the ETFs and the other transparent funds have been losing supply, but the price has been heading higher and higher. We've seen this in palladium before, and palladium skyrocketed towards the end of that move. And I think it will skyrocket again once the money printing starts again. So if gold is this strong.
Amidst a world engulfed in uncertainty, where the winds of geopolitics constantly shift and financial systems hang precariously on the edge, one asset emerges as a beacon of stability: gold. As its value surges, one can't help but ponder, if gold is this robust now, just imagine its strength when the next financial crisis hits and interest rates are slashed to zero. Are we nearing the endgame? Join us as we dive into Rafi Farber's insightful analysis, navigating the turbulent waters of global finance and envisioning the emergence of a new golden and silver age. Stay tuned till the end for more revelations.
The ECB balance sheet is about to fall again because there's a bunch of loans that are about to be repaid to the ECB from the COVID era. And finally, I took a look at palladium from a different angle. We've all known that the silver and gold ETFs in the paper markets have been falling. They've been bleeding supply. They've been bleeding gold and silver out of the ETFs, out of the storage facilities, out of all transparent funds, and still the gold and silver price have been trending higher. This has happened before in a different metal, specifically in palladium from 2014 to 2018. And then as those holdings were falling, the palladium price exploded. Will that necessarily happen in gold? It will, not because it happened in palladium, but because we're in the end stages of the end game, or the beginning stage of the end game, or some stage of the end game, but we're headed there definitely. So we're going to compare palladium to gold and silver, what's happening, and we'll see why we're probably at the beginning of a massive move in gold and silver, like what happened in palladium once the holdings in those ETFs stopped falling. I saw Monaco64 talk about money velocity in his latest video. It's a really good video. I always recommend that channel, Monaco64. Friend of mine, and he was talking about the money velocity. So the money velocity is really just the money supply divided by the GDP, or is it the reciprocal or something like that? So the higher this is, the faster dollars are being exchanged. So we see here that since 2020, it's gone from about 1.1 to, I don't know, close to 1.3, close to 1.4, something like that, 1.35. This is the first sustained move in money velocity higher since the lockdowns. It's been going lower since like 1997. What it means that it went up is simply that the money supply has gone down, but GDP has gone up. So this could be the initial signs of the head into the crack up boom. It might not be. It might be an irrelevant measure. Don't put too much stock into this number, I'd say, because it's a very, very loose number. You have the money supply, which is not exactly defined, and you have GDP, which is a BS calculation anyway, which just calculates the money supply in the first place. So I would keep an eye on this. I wouldn't take it all that seriously unless we see a serious jump in this. I want to talk about the silver price in Egypt. It's up 1,080% in the last 10 years. What happens is they moved the pound from, what was it, 15 or 20 to the dollar to like 46 or close to 50 to the dollar. And that was because they had a shortage of foreign exchange, and because they were messing with the price of the pound. So nobody wanted to give them foreign exchange at a false exchange rate that was way below the black market, the real market rate. So they ran out of forex. They couldn't pay for commodities. People were starving, and so they had to devalue the currency. Now, if you see up down here what I wrote here is think about what's happening. Think about what's happening in Egypt. If you own silver, right? It also is the same for gold. We'll see that chart next. If you own silver, what happens? People who have a bunch of pounds either under their mattresses in Egypt or the banking system in Egypt, they have a certain amount of pounds. They think there's a certain amount of purchasing power, and then all of a sudden the currency is devalued. And then what happens? Like the purchasing power they thought they had is now gone. So if somebody who only has pounds, let's say he could afford 100 slices of bread, whatever, let's just say, and now they can only buy, let's say, 20 the next day when this is devalued, then where does that purchasing power go? It goes into the hands of people with real money, with gold and silver, and also dollars in this case because they're stepping down to the dollar. But it's much safer to hold gold and silver than dollars in these types of places because we don't know exactly when the dollar is going to collapse. It's going to be soon. This was exactly what happened in the United States in 1934 when the dollar was revalued to gold from 21 to 35. It's the same kind of thing, right? When you have a false market rate for a currency versus the dollar, which is the reserve currency. You have a devaluation, and then foreign exchange can flow into your country again, but people are a lot poorer, which is exactly what happened from 21 to 35. Markets started to work again because the price was no longer lied about, but people were poorer, meaning their poverty was revealed, but that enabled trade to continue. So the repegging of the dollar from 21 to 35 is the same type of thing. Just step it up one level in the derivative scale as an Egyptian pound going from 20 to 50 or whatever it is. It's just a revelation of poverty and then the continuation of the monetary system. So the move from what will be, what is it now, 20 to 50 to whatever it's going to be, say 50,000, that's going to be intense in terms of revealing poverty around the United States and all the world that uses the dollar, which is basically everything. The poverty is going to be revealed all at once, but that is going to enable the economic system to continue with a lot more poor people and a lot more rich people of those who own the real money, because their purchasing power will move from the dollar to real money overnight whenever this revaluation happens. Whether it will be statutory or by the market, it will happen. And either way, it will be the end game. And by the way, in Egypt, the number here for gold moving up in the past 10 years is 1,583% versus only 1,080% for silver. So we see that silver is still lagging gold overall, especially relative to the Egyptian pound. So you would have been better off stacking gold than silver in Egypt up to now. But I do believe in the end game that silver will catch up and then some, because that's what it always does at the end of a monetary crisis, but it's always towards the end of it, right? Until the end, gold outperforms silver, which is happening here. But in the end, silver will outperform gold. Once we get to 15 to 1, I would switch over and start buying things with silver and switch all my extra silver to gold at that point. The ECB balance sheet I wanted to show you here has been falling as loans are being paid back from the COVID era. This has happened 1, 2, 3 times majorly since 2021, late 2021, and the balance sheet continues to shrink because of run-of-the-mill QT. And now here is what I wanted to focus on in the introduction. This is pretty interesting. So I'm looking at here the silver holdings of all the transparent silver funds. And we've seen that since Silver Squeeze is right over here, this little peak when SLV almost fell over. The holdings have been going down in transparent funds. Since then, there was a big uptick over here, which I will write about at the Endgame Investor on Substack. Try to figure out what that was. I haven't looked into it yet, but I can't cover it here now because I don't know. I just noticed it. So anyway, we see the same thing here, 3 years. So let's say we're back here. This is Silver Squeeze, February 2021. So we're now in March 2024. So that's 3 years. 3 years in silver. These holdings have been trending down while price has been trending, let's say, basically sideways to down, slightly down, but let's say sideways. Well, really here in the late 2022, is when the silver price started to recover, and we still see it trending down. So meaning basically holdings and price moving in opposite directions for about 2 years, 3 years, depending on how you count it. So in gold, it's more obvious. It's definitely 3 years in gold. So for 3 years, holdings have been trending down and price has been trending up, right? We're at an all-time high, new all-time high of about 2250. This chart is 2 days old, so we're about 2250 now. And the holdings have been trending down, and they still are. Now, when is the last time this happened to a metal? Well, we see it right here in palladium. So the blue line is palladium holdings, and we see the price here. So the palladium holdings peaked out at the very end of 2014, and they kept falling and falling and falling until early 2020. But as they were falling, pretty soon after they started falling, price bottomed here in palladium and then started to head up as holdings were heading down. So we saw here, we'll go to the next chart, that holdings were heading down for about 3.5 years as price bottomed out over here, and it was pretty even into that 3.5 year fall in palladium holdings for transparent paper palladium funds. And then as the supply of palladium in these funds started to bottom out, the price really started to move higher. So do I think the same thing will happen in gold? Yeah, I do. And since we're at about 3 years here and the price looked to have bottomed out already in gold, I think we're on that move where price heads higher and higher and the gold holdings in these funds head lower and lower because people trust the ETFs and the other derivatives less and less and less, and they want gold in their hand. We're not there yet. Premiums are still pretty low, but we're at the beginning of the move, I think. So if you're looking to trade gold with ETFs, now is not the best time to buy. But if you're a stacker, you can't really take a risk and try to find a dip because the premiums will even out your price anyway. And so the point I wanted to make, people, is that we have been in a market where the ETFs and the other transparent funds have been losing supply, but the price has been heading higher and higher. We've seen this in palladium before, and palladium skyrocketed towards the end of that move. And I think it will skyrocket again once the money printing starts again. So if gold is this strong now, imagine what it's going to be when they cut to zero on the next financial crisis. It's going to be the end game. I'm pretty sure of it. I could be wrong, as I could always be wrong. I am not a prophet. But as I see the geopolitical situation spiral out of control, I feel ever more confident that we are very close to the end of this nightmare and the beginning of a new golden and silveren age.
As we wrap up our expedition through the intricate maze of economic uncertainty, don't forget to hit that subscribe button and ring the bell to stay in the loop with all our upcoming explorations into the realm of finance and beyond. Share your thoughts in the comments below. Do you envision a new golden era on the horizon? If you found this video enlightening, don't hesitate to give it a thumbs up and share it with fellow truth seekers. Stay curious, stay informed, and let's persevere through this ever-changing landscape together. Thank you for watching.